Welcome to Trading Lounge and the Australian report for the 4th of September, starting with BHP here on the New York desk, and we'll also look at the Australian one as well. So overnight we've seen the BHP drop, but that's probably because the Australian BHP dropped, but still at the same time, as you know, we'd been looking for 1 and 2 and 3 and 4 and 5 here, and called the top in here and just waiting to see how that sort of plays out. It looks like that one's the top there, doesn't it? So yeah, we're just watching this play out now. So we should see this in a way continue to the downside here. I have to do a bit of work on this one, but we should still be seeing that move down lower. But let's look at the Australian one here. We don't really need these guys here in blue. They're just sort of complicating things a little bit, so we'll just move them out the way. Try to keep things as clean as possible and simple as possible in this complex analysis business of Elliott Wave, which also makes it even more complex. Once again, we've got 1 and 2 and 3 and 4 and 5. That's the positive news, because being fearful in bear markets as just human nature. But the positive side for this is that understand that this is a pullback here, and then we're going up again. So the question that we need to ask ourselves, and we've already asked this question and still don't have any answers for it, is if this is wave 1, will we be coming all the way back here for wave 2 in this 50-60% retracement level here? There's 2 support levels. One obviously is here, and the other one is here, where the most volume is being turned over. So that will just mirror themselves here. As I mentioned before, if I can just clean this up a little bit, it appeared that we had 5 waves coming down through here. So we were looking for a rally back up into this space here and then coming down again. And, we're on track for this. So I'm quite comfortable with that. My question is that I don't know if we get this as an A wave here, a B wave here, and a C wave down here, and we finish here, and then we go up from that point, or we get 5 waves down into the A wave here, and then the B wave, and then the C wave. So much more drawn out an affair. I just don't know that, but what I can say is that it's bearish. On the tick chart, we were short, but then we got out, so we'll just have a look at that on the tick chart. So we had a few short positions coming down here, and I counted this down here as 1 and 2 and 3 and 4 and 5 coming down here. We're getting out here because we're expecting a rally back to the 50-60% area in the box here, which we have, and now we'll be looking for further downside. It doesn't appear to me that we have 5 waves up here. So far we have 3 waves down here. So we have wave 1 and 2, well, we could have an A and a B and a C wave to this point here, but any move under that we can short. So don't even need that there, so I'll just put that over there. So any move below that, obviously we'll probably see a gap jump down from that point, but as it stands at the moment, then that's sort of where we are. We don't need these. We'll just clean these up a little bit. We'll probably need one of those. I mean, it's possible this could be an A wave here, a B wave here, and a C wave coming back up here. But because of the overnight markets moving down really strong, it's probably not the case. So we can just assume that we can go short below here. Just cleaning that up a little bit. Don't need that now. So, look, as far as Elliott goes, we have 5 waves down, and then we have the rally here. We don't know if this is an A wave here or wave 1. That's the situation here. So if I can just draw that in there as wave 1 or wave A. That's what we don't know at this stage. But it still doesn't stop us from going short here. So we can go short on this low here. But like I mentioned, there'll probably be a bit of gapping going on. It'll open up down here. So you'll just need to be a little bit mindful of that. The stop can actually come down further. We'll just leave it out of the way for the time being. So anyway, look, there's a short trade. We'll just go back to the daily chart here now. Just check on a few things. So I'll put that under there. Yeah, so it brings up the question that do we have 5 waves down here, or do we have just the 3 waves? It's something that we'll need to look at. I mean, if that's going to be 5 waves, that's going to pull that down further from there. So lost my A wave then. So I mean, it was a pretty strong move last night, wasn't it? So if the third wave's going to come in, it's going to come to here, and then we're going to get a bounce, and then we'll get that other move through here. If that's going to be 5 waves, it will be something like that, and then back for the B wave, and then down for the C wave. So the question is do we get in the A wave here, do we get 5 waves or 3 waves? Because in a wave 2 here, it's a zigzag correction. So that means that it has 5, 3, and 5 waves in it, right? It's not a wave 4 where we could have 3 waves in it. So if we only get 3 waves down to, say, a point here, and we start cruising back up here, then we'll know to go long at that point, and we'll continue to move up from that point. But I won't know until the A wave is over, so it just takes a little bit of time for all of that. So if we're short here, what we should do is we should take at least a decent chunk off the table, 60-70% at the 35. Okay, I'll just save that. And we've been looking at Rio as well, so we'll just have a quick look at Rio and CBA as well. So you have to forgive me, I haven't really pulled this apart here just yet. I could see parts of it, but I was also waiting for, in terms of the classic trading levels pattern to go bearish. We look for this. We look for the first low below the level, and then the retest as such. I haven't used these for a while. I think I really need to draw these up. And this is the other one here where it doesn't come back above the level. So it just comes down, comes back and hits it. So we use that as our first entry, as the reference point, and second reference point here. So if that gets clicked in here, then we can go long here and short here and short here. So it's basically retesting that level there. And that's what we've got at the moment for this. We can see that now we have that retested. So we didn't get a bounce off here, because if we got a bounce off here and moved up, we would have gone long above this one or this one here. So we're down here at the moment for this, and we can also just copy that and put that in there as well for that. And our trade here is down to the 90 at this point. Let's get rid of some of this because we're not interested in that. Don't need that. Don't need that. We can just see what's going on here. That's all good. So you can get in two positions here. There will be support at 95 here. But if everything is correct, then we should come down to 90. So you can split your BHP bet and put half on this side if you wanted to as well. So I'll just remove that. And that brings us down to the ASX200 area through here. So we'd been looking at this as being bullish and also bearish as well, as you may know. So we're just going to go back over those situations. But the reason I did BHP and Rio for is to show that they're in more of a bearish decline as such. So it doesn't look like it, but that's the high on the cash market over these highs here. But in this case, it looks like that's the high, but on the cash market, that's the high. So we were lining this wave 5 up and this wave 1 up with BHP. So I think we'll just stay with that because, as I mentioned before, I've had a lot of trouble with this here. It could be interpreted in different ways. So it wasn't clear. So when it's not clear, I just revert to the trading levels, and I also revert to smaller intraday patterns. So one of the things that we can do here now is we can look, well, let's go to the 4-hour chart. But in a nutshell, we can go, it's a long way off, we can go long there. And we can also go short here. There are two options at this point. But looking at BHP, it's that which this market has been lifted up by, not BHP per se, but resources, the XMJ, which also too, when we looked at that the other day, which we can. So the XMJ 1, 2, 3, 4, and 5 here, perfect. A, B, C for 2, so wave 1, wave 2, then 1 and 2 and 3 and 4 and 5 for the third wave. Fourth wave, 1 and 2 and 3 and 4 and 5 here for the top. And we've just watched this top come in at 1500, 15,000, which is a medium level. And we've seen the market edge down from that point. So this has really been our leading indicator, even though we look at BHP and so on. And didn't really look at CBA either at this point, but CBA is not really the same pattern as WBC and the other ones in the XXJ, because CBA has had 5 waves up where the other ones have only had 3 waves up. So we've got a situation here with CBA that we come down to the 65 or below that. But with the other banks, we could, because they've only got 3 waves up here, the other banks can certainly take out these lows here for this. But with the other banks and the XXJ as such, I was also thinking, just bringing it up now, thinking that this is 3 waves up for the XJ, but this doesn't really look like an impulsive move to the downside here. Yes, it could be in terms of wave 1 here, an A wave here, a B wave here, and a C wave here, then down for 1, back for 2, and down for 1, back. Anyway, moving down further from this particular point here, that low getting taken out here will, and I think it already is by a point, isn't it? So I think it's already breached that. So this is in a bearish mode, but it may not make a new low just yet. So let's just, what it could do. Taking this low here and this high here, just come down to this supply point, demand point here, roughly at 4.8 here, as an A, B, C for the A wave, and then an A and a B and a C wave down here for a B wave, and then go up for a C wave up further up here in that case. The other way it could be counted as up for 1 and back for 2, up for 1, back for 2, or up for 1, back for 2, 3 and 4 over here, and then moving up. So we'll see how it gets crunched today anyway. But with CBA here, we were looking down into the 65 area, so also bearish there as well. So it's likely that this is going to be bearish here, and we can look to go short. So on the 4-hour chart, let's just see, we were going here, we had wave 5 finishing here. We were looking at this as 1 and 2 and 3 and 4 and 5. You know that I didn't like that because wave 4 was overlapping wave 1, but we've seen that many times. So it's sort of acceptable, wrong, but it's more like a white lie really, isn't it? And then we were looking for this move back up here. We traded long here. We took a percentage here, and we've probably been stopped out here. So, but anyway, 5 waves down for wave 1 or wave A here, and back for wave 2 of B here, and that brought us in on the hourly chart. I think it was the hourly chart, yeah. So we went long here, took percentage off here, and obviously stopped out here for that. And the move up here can be counted as an A wave and a B wave and a C wave, and the reason for that is that this first move coming up through here, it doesn't count as 5 waves, it just counts as 3 waves here. So that's why it's a better fit if it's the A wave sitting here than the B wave sitting here, and looking at all of this as wave C here. Obviously we've talked about this before, so we can look to go, well, let's just get our little magic sticks, put that under here. You could probably get a bit closer. The other point here too now is that if from this is the high here, so I need to take it from that point into that point, and that to me is a pretty clear 5-wave structure down through here. So it may be possible that the markets can rally here as well. So if that's the case, then we, just for the sake of stops, we need that level here That's just technically speaking, but I would say that if we short here, and if the 6,000 becomes the tested support, so we would need to see something like this, the first high above the level, okay? Once that high above the level comes into play, then that's where the stop should go. But you have to wait for that to come in, right? You can bring it down to the second level here as well, and you can also go long from that point there as well. So we could see a corrective rally come in today, so we just really need to be careful about this. I'm just thinking it's a bit of a trap. Let me just check the tick chart here for a second. Don't worry about my labeling, I haven't updated that. Just checking on this here really. It does appear that that's the high there for that. This is pretty obvious here as 1 and 2 and 3 and 4 and 5 here to this point. This will be all of the third wave, so we've definitely got, in here. Just 1, 2. That's it there, so I can look at that. That's wave 1 to there and 2 to here, so it's 1 and 2, and I'll have to look at that. But that's definitely so I've got that now. So that's wave 1 here, wave 2 here, and this is 1 and 2 and 3 and 4 and 5 here for the third wave. So all of that's the third wave, fourth wave here. So that should come back to about 38, so that's about right. So that is 5 waves here, and that finishes there. So what we should see here, we shouldn't see a new low being made here, even though the cash market can drop further from that point, unless we cascade further down. What I mean by that is that this becomes wave 1 here and back for wave 2 and down at that point. But otherwise speaking, this, we should see a rally here today for this, so just be a bit careful about this. Not that it has to come back to the 61.8% here. What it could do is it could just have, did I have a C wave there? I thought there's one floating around, this one. So what it could do is it could just have that spike It may just have a short covering spike to come in here, right? Not reach here and then drop from that point. So it shouldn't make a new low below here. So we can short it below here. But in the meantime, if it does spike back up here and then comes back down and finds the 6,000 as the resistance, then look to short it. So as the resistance, if let's just imagine that it moves, I can't draw on this side of the tick chart, but let's just imagine that it moves up here and then drops down here. When it drops down here, let's use this example here, then wait for that reference point low here, and then when it shorts, when it goes through that, then get it again from that point. So let's just recap this a little bit. Just clean this up. So we're kind of looking for a move back up into this space here and then a drop at that point. Either way, we can short it below this level here. You might just have to accommodate that. Okay, well, that's pretty much it, because we've got 5 waves that come down through here, and it's possible to have a rally here, but the S&P and so on, they closed quite strongly to the downside, like 3.5% or something. So obviously we're going to be caught in that when our physical market opens. But based on this here, we've got 5 waves here, so we should see a rally and then down again from that point. So if it goes up here first for whatever reasons, then we'll have to wait for the second move down from that point. Because we also really should just take a quick look at our bullish count as well. So on the 2-hour chart, we've got, on our bullish count, we've got wave 4 here with wave 1 up here, and then this big wave 2 here with an A wave here, B wave here, and looking at those 5 waves as the C wave here, because it hasn't made a new low below here. If it had breached this here, then we'd definitely be on the bearish side, but I can't rule this out just yet. and that would leave this with wave 1 up here and wave 2 coming back to this point, and then looking for wave 3 to move up. So that's there as well. As I mentioned to you, I can count 5 waves up to this point, but it's better counted as an A and a B and a C wave. Also too, this does not really count as a corrective wave down here. It counts as an impulse wave down. So this bullish count has got 2 weak spots in it. It's got this one in it here, and also this particular move here as well in this case, because it's quite clearly an impulse wave. So if it was going to be bullish, it would need to see this here as wave A here, and then wave B coming back up in here somewhere, and then wave C coming back down again and then moving up here. It would need to play out something like that. So we've got time with this, so we don't need to worry about this too much. We're also expecting the S&P 500 to rally. So if I can just bring across this chart here, this is a tick chart here for the S&P 500, and it's a bit full on here and trying to understand it here. I'm just cleaning it up a little bit. But in a nutshell here, we've got also 5 waves down here on this low here, so we're looking for a corrective rally to come into play here. It doesn't need to be a big rally or anything, but we'll see. But it does look corrective already, because we've got an A and a B, or I suppose I could count this as 1 and 2 and 3 and 4 and 5 here coming back, but in both cases the 61.8% will be important, so we don't want to see it going below this here, otherwise it means that we're going lower at that point, at that 61.8% there. But just to point out that I was looking for a bit of a rally to come into play here, and we're getting that, but it may be short-lived, so just keep an eye on this as well. I mean, obviously our market's going to follow this. So, yeah, don't worry about the bullish count just yet, because we've got to get past a few hurdles first. So we're more so on the bearish side of this market, so we'll just stay with that. And we can short this low here, but just be mindful that the market can rally in line with the S&P 500 back up into this particular space here. And if I was totally wrong and this is wave 1 and 2 here, then we'll need to get support on top of 61.8%. So this move up here, a move up to that point there, would need to see that as support. Then that would ditch the bearish count at this point. All right, sorry it's not much clearer than that, but we're just doing the best we can. So alrighty, cheers.